Good day to Doctor, and we are from Group 3. My name is Chun Zhong, and also our group member, they are Yong, Kok Ren, Cherly Ong Hui Yeh, and Mong Bilin. Today, we are here to present the topic Corporate Governance and Company Performance in 3C Product Company in China from 2015 to 2019.
Hello, my name is Yong, and I want to start to present about the introduction part of this group assignment. The first part of this presentation will discuss about the industry that used in this study is 3C manufacturing industry in China. The word 3C are referred to three things: computer, communication, and consumer electronics. Moreover, 3C manufacturing industry also known as an important and modern industry in the world. From the product that produced in 3C manufacturing industry usually is high technology, such as digital phone, computer, laptop, digital camera, and electronic accessory. It has larger market space in this era of modern. Next, there are more companies that in this industry, such as Apple, Huawei, Xiaomi, but in this study just aimed at the 3C company in China. The company that taken in this study have 5: Haier, Huawei, Lenovo, Media, and Xiaomi Corporation. Next is the problem statement. The main problem that 3C industry in China face is China and United States trade war. The China and United States trade war was began at January 2018, but the beginning is come from year 2017 because of that the US imported from China is more than the export to China. When the Trump president in August 2017, he ordered traffic on China product and filed a lawsuit against China to the World Trade Organization. Not only that, Trump also restrict China investment in high-tech sector of US economy. Because of the restricted China investment in high-tech sector, 3C industry in China is being affected. The production and innovation of 3C industry is slowed down because lack of material like the chipset. Moreover, because of this problem, it also will affect the performance of 3C industry in China. Thus, in this study, it wants to determine the variable that affect the 3C industry profitability most, so it can harm the research objective in this study, that is to investigate the internal variable that affect 3C industry profitability in China, to investigate the external variable that affect 3C industry profitability in China, and to investigate the affecting internal and external variable that affect 3C industry profitability in China. And it also have the research question that is there any internal variable that affect 3C industry profitability in China, and there are any external variable that affect 3C industry profitability in China, and last is there any internal variable and external variable that affect 3C industry profitability in China. This is all my part, and next I will pass to my teammate. Thank you.
Thank you, Yong, and good day to Dr. Wei and my friends. My name is Kok Ren. My number matrix is 270994. Now I am going to present the methodology in this study. As the population in this study, there is the chosen of 3C product company in China. Xiaomi Corporate, Huawei, Haier, Media, and Lenovo is the company chosen in this study. The quantitative data are collected from annual report of company chosen from 2015 to 2019. In this study, there is the using of IBM SSPS software to analyze the data collected from annual report. By IBM SSPS software, we can get the result show that the affection of independent variable to dependent variable These equations are presented as the below of the slide, which is Model 1, influence of internal factor in ROA, and Model 2, influence of external factor in ROA, and Model 3, which is influence of internal and external factor in ROA. Now I'm going to pass my mic to Bilin.
Good day to doctor and everyone, my name is Mong Bilin and my metric number is 281786. The part that I'm going to present is trend analysis, as we need to determine how well our company is performing by evaluating the objective to initiative. Researcher can calculate the company development by analyzing the business ratio and evaluating the financial ratio of different firms in different sectors and different duration. In this report, we go through financial reports of each company, income statements, balance sheets and cash flow statement. The return on asset ROA is used to measure a company results. A higher ROA stated that the enterprise is more advantageous. As we know, the ROA is stated in percentage. As shown by the graph above, media company ROA was the largest, led by Huawei company, which means that the media company can arrange their enterprise well. The ROE is the financial success indicator that deciding by dividing net profits by investor capital. A company value minus its liability equals to its shareholder equity. ROE is the only metric that consider a company assets and ignore the liability. According to the graph above, Huawei has the largest returns on equity of the 5 firms. It means that Huawei has a higher net income compared to equity because his company performance is in a good position. Next, we will come to the current ratio. The current ratio shows how a company current assets are compared to its existing liability. The higher the current ratio, the more money is available for short-term liability. Lenovo has the highest current ratio of 1.776 as compared to the other company. Due to the higher current level, Lenovo company has more money which is ready for short-term liability. In addition, the average correction period is the time it takes for an agency to accept compensation owned by a receivable account. Commonly, a shorter SCP is preferable. The longer it needs to collect receivable, the greater the influence on the firm's monetary movement. In this case, we can see that higher can manage its receivable well, which forming an average 26 days. It shows that higher capacity to claim back receivable is deemed possible because it takes shorter time to collect receivable. Last but not least, the operating ratio is a measurable of a company management performance. When the operating level is higher, an organization's capacity to produce revenue is weakened. According to the graph above, media has the highest operating ratio 0.9084 due to inefficient management of operating expenses. The higher the percentage, the less likely the organization to make a profit. That's all from my part. Thank you. And now I will pass the mic to the next presenter.
Good day to Dr. Wei. My name is Cherly Ong Hui Yeh, matrix number 278816. I will continue to present about data analysis. The table displays the descriptive statistics results for the variables. There are internal and external variables included in the results for 5 companies, which are Lenovo, Haier, Xiaomi, Media, and Huawei. Return on assets uses as a main indicator. The mean of ROA for the 5 companies is 0.0227, which indicates that 3C companies in China increasing about 2.3% profits from assets for every 5 years. The standard deviation value of ROA for all the companies included is 0.1275. Next, I will move on to correlations. Based on the correlation table, return on assets to both internal and external factors of 5 companies is shown. There are 8 variables that shows positive value and 4 of the variables have negative value. Return on equity, current ratio, average correction period, debt to income, operational ratio, inflation, exchange rate, and corporate governance index are all the variables of Lenovo, Haier, Huawei, Media, and Xiaomi. that positive correlated to ROA. Besides, variables that negatively correlated to ROA are operating margin, GDP, interest rate, and unemployment. For the significant correlation, the table recorded that there are 3 variables are strongly significant to ROA, which is return on equity, operational ratio, and corporate governance index. The value of return on equity is 0.000, operational ratio is 0.001, and for corporate governance index is 0.006. Both variables have all the variables have the p-value less than 0.01. However, the remaining variables are all not significant to the profitability of the 5 companies. Their variables are namely ROE, current ratio, average correction period, debt to income, operating margin, GDP, inflation, interest rate, exchange rate, and unemployment. That's all for my presentation. I will pass it to the next presenter.
Okay, good day to Doctor. My name is Chun Zhong, and today I am here to present about model summary of internal factor. The ROA positively related to ROE, debt to income, current ratio, average correction period, operation ratio, operating margin, and CG index. The R value is 0.965, indicating the strongest connection between ROA with this variable. The adjusted R square value is 0.903 and show that the variable used in the model are able to explain 90.3% of the variance affect the profitability of company higher Huawei, Xiaomi, Media, and Lenovo. Okay, next is ANOVA for internal factor. The value show that it is significant with p-value of 0.078. And beside, the coefficient for internal factor show that ROE is strongly positive correlated and more significant with ROA with value 0. This means that the profitability of company was affected by ROE. Okay, now we move to the model summary for external factor. The adjusted R square value is negative 0.106 and show that the variable used in this model are able to explain negative 10.6% of the variance are not impact on profitability of company higher Huawei, Xiaomi, Media, and Lenovo. Unemployment, interest rate, GDP, and exchange rate all have an unpredictable effect on a company profitability. Next is ANOVA for external factor. This model has the significant value of 0.788. Besides, the coefficient for external factor show that GDP, interest rate, exchange rate, and unemployment are not significant with ROA. This means that the profitability of company was not affected by this variable. ROA is positively influenced by GDP, exchange rate, and unemployment, but negatively influenced by interest rate. Now is model summary for internal and external factor. The R value is 0.978, indicating the strongest connection between ROA with this variable. The adjusted R square value is 0.92 and show that the variable used in the model are able to explain 92% of the variance affect the profitability of company higher Huawei, Xiaomi, Media, and Lenovo. Next is ANOVA for internal and external factor. It shows that the significant level of 0, which is perfectly significant. Besides, coefficient for internal and external factor show that ROE is strongly positive correlated and most significant with ROA with value 0. This means that the profitability of company was affected by ROE. Return on asset is positively influenced by ROE, current ratio, operating margin, interest rate, and exchange rate, but negatively influenced by average correction period, debt to income, operation ratio, GDP, unemployment, and CG index. Thank you, Doctor. That's all for my part.
Thanks for the presenting of Yong, Bilin, Cherly, and Zhong. As the conclusion of this study, internal and external factors are both affecting the company performance of this product company in China. ROE is the most influence to the company profitability. After that is debt to income. So the higher the ROE, the greater the ROA. As the recommendation to improve the company performance of 3C product company in China, all the company must increase the price of 3C product, reduce the operating expenses, and negotiate with supplier or change the packaging of 3C product to reduce the cost of goods sold. That is all of our presentation. Thank you so much.